Here's a financial model that has been designed to assist the financial needs of the business, so if they can enable you to maximize profits and achieve business growth. This financial model is for a veterinary clinic. The veterinary clinic financial model has been designed for you to forecast up to 60-month operating budget and cash flows with a relevant set of assumptions around cost of goods sold and expenses, and then to add on the detailed revenue forecast streams. The input sheet gives an overall view of the business, and it includes all the assumptions that can be customized to your specific business model. The revenue analysis sheet is, as you can see, divided into different revenue streams. For instance, the product revenue and the service revenue, which are is divided into different services and product. It also gives the cost of goods sold and services for each month. The launch schedule gives a detailed explanation of the external funding and the payments that have to be made for each month for the next 5 months, years. The startup summary sheet gives a comparison between the total funding and the expenses. It also gives the variable costs and variable and the fixed costs and the startup expenses and startup assets. The depreciation and amortization sheet gives the depreciation for each month of for each of the fixed assets that are being used by your business. This model also has both the monthly profit and loss statement and the yearly profit and loss statement, which start by calculating the gross profit and then move on to calculating operating profit, the profit before depreciation, the profit before taxes, and finally the net profit after depreciation and taxes. The cash flow statement is very important part of this financial model, as cash generation is very important for each business to run its operations smoothly and to show the investors that the business is generating profits. The cash flow statement is further divided into three parts: the cash from operating activities, investing activities, and the financing activities. And it also gives a detailed overview of the receivables and payables for the business. The balance sheet is gives a detailed explanation of the assets, liabilities, and equity involved in the business. It gives the current and non-current assets, current and non-current liabilities, and all the equity streams. The break-even analysis gives the calculates the break-even sales for the business. For instance, for this particular model, given these assumptions, the break-even point is somewhere around at the end of third year. This is a very important sheet. Is this sensitivity analysis for your business, which includes four scenarios. One's actual plan based on the assumptions that go into the input sheet. Then there is a pessimistic scenario, moderate scenario, and optimistic scenarios. The revenue and income generated through these scenarios can change depending on these rates. For instance, if I do like minus 50 over here, so all of these figures which change and the graph would change as well. The diagnostic tools sheet gives the different financial ratios for all the 5 years, as the gross profit margin, operating expenses, profitability, and all these ratios. The project evaluation sheet gives the uh, present, future, all the as an estimate of all future cash flows, the present value of all future cash flows, the NPV calculated through the cost of equity, which is calculated, which is over here. And you can change this cost. For instance, if they change it to 6%, all of these figures maintain the internal rate of return of the company and the expected risk equity percentage offered to the investors. Lastly, the dashboard gives sums up all the figures in a very nice way by giving a visual representation of the entire business model and the performance of the business.